Do dry cleaners iron? I should ask that.
I think they press. I don't know if they iron.
It looks like the collar's all wavy.
Oh. And it just came back from the dry cleaner, you said?
Yeah, but it doesn't look that way, right? Like, looks... I don't know.
The holidays are here, which means two things. One, an unexpected and extended visit from Cousin Eddie. If you know, you know. And two, investors everywhere are whispering the same question. Are we getting a Santa rally this year? I'm Terra McBride, Chief Marketing Officer at Prime Capital Financial. And today I'm once again joined by two of our favorite Griswold family Christmas guests, Portfolio Manager Clayton Allison and Deputy Chief Investment Officer Will McGough. We're discussing whether the end of 2025 has enough cheer, momentum, and macro tailwinds to deliver a Santa rally, or if investors need to brace for a slightly less festive finale. So grab a cup of cocoa, pull up your chart of seasonal patterns, and let's unwrap what's really driving markets into year end. And don't forget, if you want to talk through what a year-end move might mean for your portfolio, scan the QR code on your screen to speak with one of our financial professionals. All right, Clayton, let's get started with you. From a portfolio construction standpoint, how do you evaluate whether a late year rally, if it shows up, is actually worth repositioning for? What signals matter most when separating hype from healthy momentum?
Yeah, it's a great question. I think heading into the year end, I mean, typically, especially with the market that we've seen pretty much throughout 2025, is a lot of it is momentum driven, a lot of it is hype driven, and it's hard to want to miss out on that if you start to see some of the names that you like to track or some of the indexes and the ETFs that you'd like to be invested in start to really rally heading into year end. But that isn't to say that everything is going to be doing that or that we're in the midst of a Santa Claus rally. The things that I kind of like to make a quick jotting down of is, what's the macroeconomic landscape look like? Is it accommodative to a year-end rally? What's the Fed looking to do? Like, we have a rate decision today, actually, on Wednesday. How are yields looking? But also for the stock market is, what does breadth look like? Is it only a small pocket of the top 10 names that are rallying, or is it widespread across indices? Are small caps rallying? Are things that are not just cyclical going forward? That's when you can kind of start to see, does it have legs, or is it really just kind of momentum and hype driving these small pockets of the equity markets?
Well, that's a great segue into chatting with Will, because I think you're talking about, the difference between an isolated kind of rally versus zooming out. So Will, let's zoom out with you. What macro forces are either supporting or threatening a Santa rally this year? And are we talking Fed trajectory, consumer resilience, earnings strength, or something else entirely?
Yeah, that's a great question. So I'll start with something else entirely. Typically, markets are strong at year end. We're talking about the Santa Claus rally for a reason. This month, S&P 500 is flat. And so if it's going to happen, it's going to happen over the last couple of weeks of this month. But if we look at the macro forces at play, Clayton alluded to it, we're going to get a key piece of information today with the Fed decision. They should lower. The administration is also talking about potentially announcing who the next Fed governor is going to be before Christmas. That could also be dovish there, with rates going lower, which would send risk assets higher. And right now, consensus is GDP and earnings per share are going to rise in 2026, and on some very optimistic assumptions. And so seeing a broadening of the rally, as Clayton also alluded to, microcap stocks are up almost 10% this quarter, would help out so that we're not just relying upon a handful of stocks to lead the stock market higher.
I mean, it's totally possible to get that final push, right? I don't know about the two of you, but every year I feel like I'm getting ahead on my Christmas shopping, and inevitably I'm at December 10th or 15th and I'm thinking, my goodness, I have so many more things to buy this year. Clayton, if we do get a Santa rally, what areas of the market historically benefit the most? And are you seeing similar patterns emerge in 2025? Conversely, where do you see pockets of vulnerability that investors might overlook?
Yeah, I think you kind of alluded to it, right? It's shopping. And yeah. I mean, I'm right there with you. I'm kind of behind the eight ball this year and I'm scrambling. But typically this time of year, obviously you're going to be seeing the consumer discretionary names kind of start to take off, get some more tailwinds just from consumer spending trends, obviously. And we have seen some of those trends emerge. Like we did see that Amazon announced they had one of their best Black Fridays ever in the company's history. So we still know that the consumer is shopping, whether that permeates to the broader equity markets and starts to show that in the stock price is a different story entirely. So we are seeing that in small pockets there. Now, some areas that people may be overlooking is the story that's kind of been playing out for the equity markets for the last 2 years is, hey, large cap tech, especially the Mag 7, maybe are starting to get a little overstretched. The AI trade might be starting to maybe possibly lose some momentum. We've seen Nvidia fall, over the last couple of trading sessions, just over the last month or so. So it's not always just, hey, dump it all in the Mag 7 and sleep easy at night. That might be an area that people are overlooking where there could be more of a seasonality component heading into year end.
Yeah, that's great. Will, beyond the seasonal narrative that Clayton's talking about, what should investors actually pay attention to in these final weeks of the year? What are the real economic indicators that matter more than the quote unquote Santa rally headlines?
Yeah, so I think year end is a great time to have a conversation with your financial advisor. We're not going to have many economic data points the last couple of weeks of this year, so it's a really good time just to revisit the overall plan you have in place. If you think about 2023, 2024, they were 20% plus years. Tech stocks are up over 20% this year. S&P 500 is up almost 20% this year. So it's a good time to work with your advisor and to figure out the propensity of risk, because we could see this train slow down at some point. It's just a matter of when, and nobody has that crystal ball. And so I think, you got to look for potential next year. Could have geopolitical flare-ups. There can be some political chaos with midterm elections. Starting to see a few headlines about the credit markets having some small cracks. So those widen. And then the topic du jour is inflation. If it's going to stay sticky or even increase as well, that could send risk assets higher or lower depending upon how the Fed reacts and rates ultimately move from there. So a lot of things that could go on, and it's a great time. It's a busy season for us because we're positioning how we want to position portfolios for next year and recapping how we've done this year. And so I'd say take advantage of the opportunity to use the calendar year end to reevaluate your situation with your advisor.
We're all feeling so resolution-y at the end of the year, right? So our finances should be a big part of those resolutions as well. And like you said, Will, talking to your financial advisor, just kind of level setting, resetting, and making sure that everything aligns, and the things that we know that are coming that we can plan for, let's plan. So thank you guys. I really appreciate your time. Whether Santa brings a rally, a plateau, or a lump of coal this year, there's one thing that we know to be true. Smart investors don't rely on folklore. They rely on a disciplined process, informed guidance, and a team that helps them navigate what comes next. A huge thank you to these guys, Clayton and Will, for helping us understand the real signals shaping the close of 2025. And of course, having a sense of humor through all of our videos. I always appreciate it. And if today's conversation sparked a question for you about your own investment strategy, consider this your sign. Scan the QR code on your screen to connect with one of our financial professionals. We're here to help you finish the year with clarity and confidence. Thanks for tuning in to our series this year. We so appreciate your time, and we're really grateful for you listening to us. We hope you have found value in the insights offered through our team. And as we close out 2025, we want to remind you to stay informed, stay invested. And as always, we'll be here to help you navigate the twists and turns of the market. Until next year.